Welcome to Stifel's Sightlines podcast, focusing each week on a topic or two important to investors. Well, greetings and welcome to the Sightlines podcast. This is Michael O'Keefe, Stifel's Chief Investment Officer. In this episode, I want to talk a little bit about animal spirits, which are in real focus these days. And with that, take a look at some soft data and some hard data, really around mostly the economy, but a little bit the markets as well. And, we know that there's been a lot of nervousness and uncertainty in the environment, much attributed to the sort of changes going on in DC. People are focused on tariffs. They're focused on government layoffs. And there's just been sort of a negative sentiment that's sort of developed. And of course, the market has gotten volatile and traded down a little bit, the equity market. So we just want to take the opportunity to kind of dig into that a little bit, but especially take a look at some of the data. And again, we'll be watching new data as it comes out, but that which we've gotten our hands on, we want to kind of dig into it a little bit. And so when we talk about this type of data, soft economic data is really something that's anticipating change. So it's typically around sentiment, it's around expectations and surveys and things like that. Whereas hard data, of course, is measuring actual economic results, economic outcomes of sorts. And so when we dig into that, what we're sort of seeing at a high level is that the hard data is holding up, but the soft data, some of it is showing sort of a turn. And in some ways, sometimes the soft data is a leading indicator, so we have to pay close attention. But anyway, let's jump in to it. Now, think of it as we're going to get into almost like three segments: the consumer, businesses, and then overall the economy and the markets. And so when it comes to the consumer, basically the hard data remains pretty solid. So unemployment is low. The labor market more broadly is strong. So unemployment sits at 4.1%. We've had initial jobless claims and non-farm payrolls holding steady. And then when we look through January for the year ended, that period, so the year ended January, retail sales are up over 4.2%. And that's the hard data, right? But the soft data, consumer survey data, there's basically the Conference Board Consumer Confidence Index, and then the University of Michigan Consumer Sentiment Index. The Conference Board Confidence Index basically fell a little bit to 98.3. And that doesn't really mean anything, except to say that number is still above sort of neutral. So it's declined. Confidence has fallen a little bit, but it's still above long-term averages. In contrast, the University of Michigan Consumer Sentiment Index declined as well to its measure of 64.7. But what's more important, in addition to the negative move, is that that's below the long-term average. So there's some data and indication that the consumer's kind of spooked, and there's a lot of talk about inflation. There's a lot of talk about tariffs and worries, basically, as to what's going on. But again, hard data holding up just fine. Now, turning to business, the activity as we measure it remains positive. So it's easy, for example, to look at the full calendar year 2024 at the S&P results, for example. Revenue grew over 5%. Earnings is estimated to have grown well over 10%. I think 10.6 is the current estimate. And against that backdrop for the year ended January, we've seen industrial production up 2% over the year. So again, hard data for business looking pretty good. But survey data is mostly positive, but a little bit mixed and a little bit softening. So, for example, the ISM, it's the Institute for Supply Management, Purchasing Managers Indices. There's a manufacturing version and a services version. They both, the manufacturing fell just a little bit to 50.3. It's above 50. That means expansionary. The ISM services PMI actually rose to 53.5. So that's a little bit stronger reading. Again, expansionary. So those numbers are modestly positive is the way to think about it. Now, the Conference Board has a CEO confidence survey, which rose to 60, which is the highest level in 3 years. Now, I think that was a January reading. So, of course, we'll watch as things unfold and we see more data come out. But that corresponds to, for example, the National Federation of Independent Business, the Small Business Optimism Index, which basically fell to 100.7, but it's also still, it's softening, but still modestly positive. So, I think the way to think about it is in the business environment, people remain generally still reasonably optimistic, but there's certainly a lot of talk of, given the uncertainty of tariffs and other uncertainties, the risk of slowing down on, capital investment, things like that. So, of course, that'll be in keen focus. Now, as it relates to sort of the general forecast for the economy and the markets, and, people are going to sort of take into account some of these recent changes, but so far, the consensus estimates have held up. What do I mean by that? Well, the GDP growth rate expected for 2025, the consensus estimate sits at 2.3%, so above trend growth. The earnings growth as well remains healthy at 11.3%. And then the average year-end forecast for the S&P 500 sits just about 6,500. It's actually 6,501. From recent levels, that would reflect a 17% return between now and year-end. Now, we're not saying that's going to happen, but there's a general sentiment that this market drop is possibly a little premature, a little overdone, and that we could see markets recover. Now, with that said, this decline, that's actually an interesting concept in the sense that at the end of the day, one of the most commonly referenced leading indicators, if you will, around the economy is the stock market. So the stock market, as of earlier today when I put these notes together, had declined basically about 9% from its recent high in February and is down in round numbers about 5% year to date. And essentially, that's all swirling around this uncertainty and people being nervous about tariffs and people being nervous about government layoffs and things like that. And so essentially what the stock market, what investors are signaling is worry about a recession, worry about a slowdown, a decline in company profits and earnings, for example, that would come with that. And so, our view is it's a bit overdone, that there's a little bit of emotion in the environment and that we don't expect, certainly significantly more declines in the near term. But also, honestly, just an expectation that this might be a little bit overdone and we could see a little bit of recovery in the coming weeks and months. So listen, that's what I wanted to cover in this episode. Again, to review the idea that animal spirits drive, sort of the emotion that drives the economy and the markets to a good degree. When we look at soft data, which is sometimes leading data, there's been a little bit of a turn toward not as positive and sometimes negative, but most of the hard data we're looking at remains strong, right? The fundamentals, they've currently been measured, show pretty good strength from the consumer, pretty good strength from businesses, and an overarching view that the economy will continue to grow and the earnings will grow on companies, and that will support a stable and possibly positive equity market. So again, thanks so much for listening to this session, and we'll catch you on the next one. Thanks again for listening to Stifel's Sightlines. Be sure to subscribe wherever you're listening to automatically receive each week's podcast in your feed.